Morning, market chameleons. Welcome to the pre-market show. This is Will and Dmitry. Morning, Dmitry.
Good morning, Will. Good morning, everyone. Thank you for joining us.
All right. You want to start right away with the disclaimer? What do you think?
Yep. Yeah, we'll start with the disclaimer, then we'll go on to the morning pre-market, see what's going on. So what Will's going to do is just bring up the disclaimer. So everyone, Will and I, we're not registered investment advisors, neither is Market Chameleon. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional advice, then contact your registered investment advisor or call your broker. They should be able to help you with your questions. So there's the disclaimer.
Awesome job, Dima. Hey, listen, everyone on YouTube Live, there are quite a few people on there in the chat. You know, any questions, just put it in the chat. You know, a thumbs up is always appreciated. And if you're new and not subscribed, make sure you subscribe to the Market Chameleon YouTube channel. It's a real big deal. You'll get alerted whenever we go live. All right, Dima, what are you seeing this morning, buddy?
All right, great. So what I'll do is we'll start out with the pre-market report. And I think after that, we'll look at a couple upcoming earnings events. We'll take a look at what the options are pricing in the earnings moves to be. I think then we'll go over some open interest, long buildups and calls. We'll look at the unusual option volume report. Then we'll take a look at some vertical spread ideas from the screener. So that's I'm going to try to get all that in and take any questions along the way. So anybody has questions along the way, just put them in the chat. We'll stop me and we'll go over any questions. So if you guys are joining in for the first time, this is the pre-market report. Stocks that are trading in the pre-market hours, got the most active stocks, biggest gainers, percentage gainers, biggest percentage decliners. Before I go to the top of the list, let's just take a look at anything that's moving in the higher market cap stocks. So here we have WDAY, that I think reported earnings, that's up 10.4% in the pre-market hours. Walmart up 3.3% in the pre-market hours. He said, well, there's some news on Walmart. They're getting together.
Walmart and Microsoft are forming a partnership to actually try to buy the TikTok piece. It's only the American piece, actually. It's going to be an interesting structure and see how it works out. If it actually is the piece that works to grab TikTok, but that's right in the news right now. Yep.
All right. Abbott, that was in the news yesterday, up 2.8%, something with the COVID. They got some news with COVID or some kind of
quick test.
It's a quick test. Right. Tesla, that's up to 2.6%. Gold up 2.1% in the pre-market hours. So a lot of big cap stocks making that list. You know, one I see down, SNUI down 2.1%. Let's just go back to the unfiltered list to see what's popping up top. So we see NSYS, that's up 76% in the pre-market hours on 3.2 million shares. Very low market cap stock, $10.5 million market cap stock. Looks like there's some news on there pushing that stock higher. Let me see, XPEV, that's up 14.1% in the pre-market hours on 2.7 million shares, $9 billion stock. Also some news that's pushing that stock higher. So let's take a look at XPEV and let's take a look what's going on in the pre-market hours in that stock. So here it closed at, is that a new stock actually? That
maybe.
Looks like that just, yeah, that looks like that just actually probably got listed. Yeah. So, you know, we're not going to have we're not going to have any historical data on that, but up 14% in the pre-market hours. Looks like that just recently IPO'd. At least I'm not getting any historical data on that stock. So let's just take a look at something. Well, let's take a look at this NSYS, low market cap stock. Here we see closed at $3.96. It's an electronic components business. In the pre-market hours, trading $6.90. That's up 74.2% in the pre-market hours. Here's what the chart looks like in pre-market. Longest VWAP bar I see is $6.82 to $7.12 on trading 1.2 million shares. Total volume in the pre-market 3.3 million. That's compared to a float of 1.2 million. So for that stock on a relative basis, a lot of volume, right? We see the range here 350 to 734 in pre-market hours, so it's liquid. There's some news out here. I'm not going to go into the news. I'll let you guys interpret that news and see if that jump is warranted or how you guys feel about it. But let's take a look from a historical perspective. What did this stock do after opening, after a big gap up opening in the morning? So here we're looking at, in the last 3 years, these are the 12 biggest gap moves to the upside in this stock. So we see on average, the average gap move to the upside is 8.9%. I think a high move here, 16.7% on April 22nd to 20. So nothing like this, 74.2% in the pre-market hours. We see here 52-week range, 252, 746. So it's right coming up close to that 52-week high. Let's just take a look what it tended to do after large gap up move. So we see here that on average from the open to the high, it only gained 0.1%. A lot of times that opening basically was the high of the day. After the opening, it came in. From the open to the low, the average move was 8.8%. From the opening to the close of the day, it tended to drift lower more often than higher. 92% of the time, it closed lower than that opening price for an average loss of 7.3%. So really quickly, that's a price action analysis on NSYS. They do have some news today, that you have to take into consideration. We haven't seen, at least in our data set, a gap move as high as today's of 74.2% if it opens there. Let's take I wasn't going to spend too much time on the pre-market report today because I wanted to cover more reports. So Will, unless you see any questions, let me know. Otherwise, I'll just move on.
Well, we had a question, D, and I may not be picking up on where that data is, but we have a question from a new chameleon. He's asking, what's the difference between the volume and the float volume? I don't know if there was something you showed.
Yeah, okay. So the volume, that's saying the amount of shares that actually traded in the pre-market hours. So those are the amount of shares that are being traded between buyers and sellers. The float is that's the amount of available shares out there to, kind of like outstanding shares, but a float is a little bit different calculation where they take out some of the stuff from the outstanding shares that aren't available to trade. So the float is just the amount of shares available to trade. Volume is the amount of shares actually traded hands.
Perfect. Awesome.
Okay. If nothing else, I'm going to move to the earnings right now. Yeah, so let's just do that. So on the upcoming earnings front, let's just see what's coming up in the next 2 weeks. I'm going to look at it from the perspective of options. So what the options are saying about the magnitude, the expected magnitude of the move after the earnings release. So let's take a look at stocks that trade at least 10,000 option contracts or more on average per day. And here we have a list of stocks that are expected to report in the next 2 weeks. So we have Zoom, that's expected August 31st after the market close. That as of yesterday's close, the straddle buying the put, buying the call at the money was implying a move of 12.7%. That compares to a 4-quarter average move of 8.1%. And a 12-quarter, I don't think they actually had a full 12 quarters yet, but whatever amount they had, that compares to an average move of 10.2%. So we see that's 4.6% above the 4-quarter average, 2.5% above that 12-quarter average. The high move on that is 18.4%. Macy's, that's expected September 2nd before the market opens. Right now, as of yesterday's close, the straddle was pricing in a 19.6% move. That compares to a 4-quarter average move of 6.4% and a 12-quarter average move of 7.2%. The high move on that is 15.9% in the last 12 quarters. Well, you mentioned, which one was it? CLDR, GSX, GSX, September 2nd before the market opens. That's pricing in an implied move of 26.4% in either direction, compared to a 4-quarter average move of 5.4% and a 6-quarter average move of 12-quarter average move of 6%. Is that a relatively new stock?
Yeah, I think that is relatively new.
That's relatively new, so there might not be enough data on that.
And CLDR is the cloud computing entity.
Right, so that's the cloud computing entity. Also, September 2nd, expected after the market close. Right now, pricing in a move of 15.2% in either direction, compared to a 4-quarter average move of 9.2% and a 12-quarter average move of 15.7%. High move on that is 40.8% in the last 12 quarters. So let's take a look at that one. And you said that this one's relatively new, right? CLDR.
Yeah.
So let's see what happened here. So the option mark is they overestimated the move 62% of the time. On average, the implied move prior to earnings was 15.9% in either direction. The actual earnings moves on average was 15.7%. So here's what these bars, that's what the implied move was for that earnings. The red, that's the actual move to the downside. The green is the actual move to the upside. So here I'm hovering over on June 3rd, the implied move in either direction by the options market was 13.4% in either direction. The actual move was down 12.9%. So we do see here some big ones here where this was down on June 5th. The implied move was up or down 14.6%. The actual move, the stock was down 40.8%. And I think we had a big one right here too. April 3rd, 2018, the implied move was plus or minus 13.4%. The actual move to the downside was 40.2%. So as we can see here, long straddle was a winner 42% of the time, but the average return was positive 17% because of these huge outlier moves over here. Long strangle, that was a winner only 33% of the time, but your average return was a positive 29% because of these huge moves right there. So that's really quickly on CLDR. If you don't have any earnings questions, what I'll do is go to the open interest and then unusual option volume, Will, and then we'll look at credit put spreads.
Sounds good.
Okay. Let's take a look at the open interest here. Oops, sorry, my mouse is.
No worries. Hey, while D's dealing with his mouse, make sure everyone you subscribe to the YouTube channel. I know I say that a lot, but it is a real big deal. And also a thumbs up during the show is always a nice feeling.
Okay. So now we're going to just take a look at what happened in the open interest changes from yesterday's activities. So here I'm going to look at open interest that increased at least by 1,000 contracts or more on a specific line, on a specific option. We're also going to set that the open interest increase represented at least 20% or more of the average daily volume in that option. So at least 20% or more of the average daily option volume in aggregate. Also, let's take a look at, we're going to look for a call option. I'm going to also set that option to be at least 25 cents or higher in price, that the option had to increase yesterday by at least 10 cents or more. Let's say the implied volatility on that option had to increase by at least 10%. Let's also set the delta. So we're going to look for an option that's at least at the money or out of the money. So I'm going to set it to a delta between 0 to 50. And let me take a look at what we, so we have about 21. We filtered out 21 options here. So here we have Abbott. We see in Abbott, there are two of them. August 28th expiration, the 120 call closed at 65 cents, up 256% in the implied volatility. That the open interest on that line was up 8,157 contracts, which represents 42% of this average daily option volume. So that average daily option volume, remember, that's in aggregate, all the options combined. Just on this line, it increased by 8,157. Also, looks like September 4th expiration, they also came after the 120 call. That option was up to $1.80. The implied volatility was up to 22% on it. The open interest increased by 9,121 contracts. That's our getting long buildup. That represents 47.9% of the average daily volume in that. One thing, Abbott did have news on it. Let me just take a look what it's doing today. So up 2.8% today in the pre-market hours. Again, some with fast testing with COVID. Well,
yep.
Dell Computer looks like they came after the September 18th 65 call and 70 call. We see on the 65 call that the option closed at 292, up 82 cents. The IV in that option is up 18.8%. The open interest on that line increased by 3,652 contracts, which represents 47.9% of the average daily volume in that stock. So let me just see what Dell's doing. And I think that's up 3.6%. Did that have earnings? Because I'm getting this little E here. So it looks like they had an earnings, right? In Dell Computer. Let me just see, because we have a bunch of them, if any other ones stand out here. Let's take a look. IMAX. So IMAX, that was up 5.2% yesterday. Looks like they came after the September 18th expiration, the 16 call. That option closed at 60 cents, up 38 cents on a day. The implied volatility was up 23.6%. Open interest on that line increased by 1,981 contracts, which represents 138% of its average daily volume. Let's see what that's doing today. Up 2.2%. In the pre-market hours, WDAY, we talked about that one, that came out with earnings. So yesterday they came after the option expiring today, the 222.5 call. That was up to 670. Open interest increased by 3,144 contracts. They also came after September 4th, the 245 call. That option closed at 340. And that open interest increased by 2,461 contracts. That's our getting long buildup. And that one reported earnings today, right? So it's up 11.2% in the pre-market hours. So that's really quick. What's some of the big open interest gainers in the calls from yesterday's activity. Will, if you don't have any questions on open interest, I'm going to head to the unusual option volume.
Sounds good, Dima.
Okay. So let's take a look what happened yesterday in the unusual option volume report. Here we see, I'm just going to go from the top of the list. So VBIV, that's a lower market cap stock, $981 million market cap stock. That was up 32% yesterday. Looks like the option volume was 6.8 times its average daily volume. So looks like $3.4 million in notional of calls traded versus 584,000 of notional inputs traded. That's in dollar value. Let's take a look if it's doing anything in the morning. Up a little bit, 1.8%. DGLY, Also, very small market cap stock, $68 million market cap. It looks like that the option volume was 4.3 times its average daily volume, $1.4 million in notional calls traded versus $135,000 in notional puts traded. The stock was up 25%. So that's like a low price stock. Let me just see if anything's going on in there. So down 2 cents, almost unchanged. AMC traded 4.8 times its average daily volume yesterday, $6.2 million worth of calls traded versus $945,000 worth of puts trading hands. It was up 16.4% yesterday. Let's see what's going on in AMC today. So also up 8 cents, not much. Let's just take a look at one more and then we'll move on. So PLCE, Children's Place, also that traded 2.5 times its average daily volume, $470,000 worth of calls in notional traded versus 448,000 in puts. That stock was up 9.9% yesterday. Let's see if it's doing anything today. Up 2.5%. So that's really quickly. Let me just take a look at some higher market cap while we're on here. So Microsoft, let's take a look at what happened. Microsoft traded 3.5 times its average daily volume, $741 million worth of calls traded versus $77 million worth of puts. So let's take a look at Microsoft.
Well, it is interesting. I mean, you see the Microsoft and the Walmart, both of them, they had high call activity yesterday.
Yeah, Walmart traded 8.3 times its average daily option volume yesterday, $197 million worth of calls versus $16.4 million worth of puts. And that one was, that was in a pre-market. That's up 3.5%. Tesla, that also traded 2.1 times its average daily option volume. Wow, $6.1 billion worth of calls trading versus $1.9 billion worth of puts. I mean, that's very high price stock as well. So that Tesla also, I think, was moving into pre-market hours. Let me just take a look. Up 2.7% in pre-market hours. So that's from the higher cap stocks. From the
I think Tesla's moved like 30% since they announced the split. I mean, its move has been incredible.
Yeah, let's take a look at the Tesla move actually and see how it performed in like the short term. So I'm going to go here to the summary. Let's take a look at the trading stats for Tesla. So here we go. So just in the last 2 weeks alone, up 38.1%. In 3 months, it's up 172%. In 6 months, up 229%. So yeah, very big move just in the last 2 weeks. In 1 year, it's up almost 1,000%, 945%.
Yeah, well, it's up almost 50% since they announced that they were going to split the shares.
Yeah. So it keeps going. And the same thing, I think Apple, same thing, right? When Apple said that they were going to split the shares. Let me see what Apple did. I know they also announced stock split. So yeah, not quite as much, but in the 1 month, just in a 1 month period alone, up 32.1%. So Apple might have even a different story. I think that the play there is what the 5G, when they come out with the 5G technology, people are going to start upgrading their phones. Is that what
that's one of the theories.
Huh?
That's one of the theories for sure.
Yeah, one of the theories that once the 5G network starts coming out, and what is that 5G? Do you know, Will? It just makes everything much faster. And
I think when like the processing of the information is going to be much faster, and you know the things you're going to be able to see on your phone is going to move quick.
It's going to move, yeah. And from at least what I'm reading, I don't know what other people are saying there in the chat, but from what I'm reading, that besides having a smartphone, we're going to be able to have a lot of smart other devices, like, you know, what do you call it, self-driving cars and, you know, appliances doing like different things. So you're going to be able to like create a lot more smart devices besides your phone because of that technology. You know, and they're all going to be like somehow working with each other. So I think that might be the play, because I'm looking at their, like, you know, their PE right now, and it's like way above its historical averages. So I think that 5G is coming into play. Let's take a look at credit put spreads. Unless you have anything coming through, let me know. Will, I'm just going to go to the credit put spread screen.
Yeah, that's perfect.
Okay. So these are credit put spreads. And, you know, if it has a bullish outlook. So we're looking at credit put spreads with a bullish outlook, you know, selling one put, buying another put. And let's look from this credit put spreads. I'm going to go here to our presets, and let me take a look at, I'm just going to pick one here. Let's look at top stocks in an uptrend. So these are stocks right now in an uptrend, and it's looking for vertical put spreads based on certain parameters that they look good from a historical perspective, good probability of profit and theoretical edge. So here, let's take a look at Apple, the first one up here. So Apple closed at $578. It's taking a look at the September 18th expiration, selling the 480 put, buying the 475 put. It looks like you would get a credit of $1.70 based on yesterday's closing prices. We think theoretically it's worth 75 cents. So you're basically selling it for 95 cents better than that. You're getting 95 cents extra. That gives you a theoretical edge of 28.8% with the historical win rate of 83.8%. So here, this is your amount at risk. So if Apple at expiration is below 475, you buy that put spread back for $5. If you receive the $1.70, then you lose $3.30. So that's your risk. If Apple at expiration stays above 480, which is it's already above there, 500, as long as it stays above 480, you keep that 170 credit, which is a 51.5% return on the money at risk. So 51.5% return on your money at risk on September 18th expiration if Apple stays above 480. You also have a 4.5% cushion. So if Apple just sits here, you'll make that 170. If Apple goes up, obviously you make that 170. You keep the 51.5%. If it goes down against you, you have a 4.5% cushion before you break even. After that, you start losing. So it's 580, falls anywhere above 480. You keep that 170. If it goes below 480, you got $1.70 extra that you receive. After that, you start losing. So that's your 4.5% cushion. Microsoft, that's closed $226.94. It filtered out the September 11th expiration, selling the 225 put, buying the 220 put. You get a credit of $1.95 from yesterday's closing prices. The theoretical value on that, we think it's worth 72 cents, gives you 40.2% theoretical edge with a historical win rate of 84.1%. If that stock stays above 225, right now it's 226.94, stays above 225 on September 11th expiration, the return on your risk is 63.9%. Facebook closed at 293.67. That's looking at the September 25 expiration, selling the 287.5 put, buying the 282.5 put for a credit of $1.95 based on yesterday's closing prices. We think the theoretical value of that spread is 69 cents. That gives you a 41.3% theoretical edge with a historical win rate of 86.3%. If that stock stays above 287.5 on September 25 expiration, the return on your amount at risk is 63.9%. Let's take a look at Alibaba, what it came up with. Alibaba closed at 284.01. That's filtered out the September 18th expiration. Selling the 275 put, buying the 270 call. Sorry, selling the 275 put, buying the 270 put for $1.90 credit. We think it's worth $1.01 theoretical value. That gives you a 28.6% theoretical edge with a historical win rate of 78.7%. If the stock stays above 275, it's 284, stays above 275 on September 18th expiration, the return is 61.3% on the amount at risk. Let's do a couple more. Let's do Visa. Visa, that's another one that can benefit from that 5G, right, technology. I think Visa, what do they do? Are they building like the infrastructure? Or I guess they're doing the cell phone service.
Wait,
right?
no, your Visa is the credit card company. You're thinking of Verizon.
Oh, yeah.
Verizon.
Visa,
Verizon.
yeah.
And
I'm thinking
Verizon could definitely benefit. Actually,
right.
Mike on the chat was saying it's like driving a Bugatti versus Volkswagen, the 5G versus 3G.
The 5G, yeah, is going to be like exponentially faster speed. That's what they're saying.
Yeah.
You know, it's I was trying to read about the technology. It's a little bit confusing with like how it's supposed to be structured, but yeah, like it's going to be, I don't know, what is it like? Is it like 10 times faster or 100 times faster? I forget what it is, but a lot faster data processing. So,
yeah,
and
which
more,
every company is going to benefit from. I mean, it's going to be beneficial for everyone. Listen, D, we have a quick question while you're on the credit put spreads. Pavel's asking, are put spreads better than call spreads? I mean, it's just.
So not necessarily, you know, they're actually mirror images of each other's, you know, so a put spread and a call spread on the same lines actually create a box, what they call a box. So they have to be kind of in line with each other, or you're going to create an arbitrage. The thing about a call spread that's a little bit different than a put spread is in the call spread, you have to watch out when there's a dividend, because if you have a deep in the money call spread and there's a stock that's going ex dividend, as long as you know that call is deep in the money, you're not going to receive the dividend unless you exercise the call, because only stockholders get the dividend. An option holder doesn't get a dividend. So you have to kind of remember to exercise your call, deep in the money call. Remember, not at the money, not out, deep in the money call. You have to kind of remember to do that. The other thing is that if you have a stock, let's say you're holding an Apple stock for many years and you don't want to create a taxable event because you don't want to sell it. But if you do a call spread, depending on how, you know, your broker treats it, because one option, you know, the options get exercised, so you kind of end up buying and selling the stock at the same time. That could create a taxable event on the stock that you held long. So just couple things, nuances to take into consideration when you're doing call spreads versus put spreads. But if you know what you're doing, the payouts should be the payouts and the reward should be similar, right? They should be equivalent, or you could create an arbitrage between the two.
Excellent. Just a heads up, D, we only have a couple minutes left.
Okay.
Dom, who I've just noticed joined the YouTube chat, he's just letting us know and giving every chameleon out there a heads up that the Apple split is this weekend. So just.
Oh, okay. Oh, it's this weekend? Okay.
That's what Dom is letting us know. Thanks, Dom.
Okay. Thanks.
Anything else? Any parting words for the crowd? Dima.
No, well, we have like a minute to go, so I'm going to let everybody go, set up their trading. Thank you for joining us. We're going to do a webinar on Monday So we're going to continue. We started with the options chain. We had a few questions. What is theoretical value when we put up the options chain? So that's that. I think we'll focus on that topic. Theoretical values on the options chain.
Yep.
That will be Monday evening.
Monday at 6 p.m. We'll send out a link Monday morning on the live pre-market. And everyone, you have a great weekend. Thanks, Dima.
Yep. Thanks everyone for joining us. Have a great weekend. Have a great trading day.
Have a safe trading day, everyone.